Earlier this year, Ireland commemorated the centenary of the Easter Rising, the rebellion that set it on the path to independence from Britain. But a more recent so-called Independence Day has been a rather less happy occasion. Since the result of the UK's EU referendum was announced, the ISEC overall stock index has fallen by more than 12%. That is more than any other major European stock benchmark. The UK-centric FTSE 250 index has lost more only because of the impact of the weaker sterling-euro exchange rate. Now, in one sense, you would expect Irish shares to be hit hard. Aside from the UK itself, Ireland is the country in the EU with the most to lose from Brexit. Dublin's Economic and Social Research Institute estimated last year that each percentage point reduction in UK GDP knocks around 0.3 points off Ireland's GDP. But the links between the two countries are not as strong as they once were. Once upon a time, half of Ireland's exports went to the UK. Now it's around 15%. And Ireland's economy has been powering ahead lately, while the UK's has been sluggish. So why has the stock market been hit so hard? One explanation is simply that it's small. Britain's mid-cap index, even in its shrunken state, is 5 times as big as the whole of the ISEC. When investors want to get out of small markets, they often sell the stocks that they can sell, not always the ones that they should. And in Ireland, that means these ones. The ISEC is very top-heavy. These 5 companies alone account for almost 3/4 of the index, CRH a quarter alone. Their shares also trade in London, which is a much bigger and more liquid market. Some of them are very exposed to the UK. Paddy Power, for instance, gets around half of its revenue from the UK, probably more now that it's merged with Betfair. But others are not so UK exposed. For Ryanair, the airline, around 1/4 of its sales are in sterling, and for CRH, a building materials group, movements in the dollar are much more important than those in the pound, because half of its profit comes from the Americas. Back in 1916, the rebels were initially defeated, yet within a decade, Ireland had its independence. This has been a bad week for Irish shares, but just as then, I expect things will get better.